thank you for having me in your program. Indeed, we were very happy with the strong results that we posted for the first half in 23. Occupancy levels, as you said in your introduction, high across the entire network, above 90%. And mainly if you focus and digest that over the different markets in which we're active, energy market strong, continued strong demand, and even increasing a bit in terms of demand for our services. And on the manufacturing side, we've seen a lot of stable developments, I would say, throughout the first half of the year in the different regions and geographies where we're active. If you specifically zoom into Europe, where your question is going, I would say for Europe, we've seen a couple of developments. On the manufacturing side, industrial manufacturing side, definitely a bit of slowdown in the first half of 23. But you see that the demand for infrastructure services is what we do, is then you see an increase in demand, and an increase because of the fact that people need to import raw materials that are not being produced over here. So that's helping us in one way. On the pure energy side, and looking ahead of the winter, we see relatively stable developments at the moment in terms of demand for gas, LNG storage services, and well prepared, I think, as we can see it now for the winter time. But that remains a bit unclear. But as you know, then the demand for our services and the direct impact that it has for demand on our services is relatively stable, and that's also what you see with the results that we've posted, which I'm very happy with.
Yeah, that's a really interesting take on everything, Dick. Look, but in terms of the amount of storage in Europe, to keep it above 90%, that's very interesting, given the fact that more infrastructure is being built all the time. More facilities for imports of LNG are being developed the whole time as well. Is there a danger that you're investing for the medium to long term on the basis of something that could change very quickly, i.e. the attitude of Europe towards Russia as well? And as such, there could be a lot of infrastructure developed now that hopefully, if we get into this war at some stage, that actually could be very difficult to fill in future times.
Yeah, I think there's a few elements to that. First, remember, there's still a lot of piped gas that was moving into Europe that needs to find replacement to land on the European mainland. So there is infrastructure needed. There was infrastructure that was needed that is being constructed and has been commissioned. Well, what I can tell you is that from pure interest for market players, it's still quite healthy, not for the short term only, but for medium to even long term. And you see that underpinned by the intent, not yet decided, but intent to invest in expansion of further capacity here in Rotterdam. At the same time, and that's what we find also attractive to invest in this part of the infrastructure, is the transformation potential that infrastructure provides you towards a different type of energy future that we're going to head to in 5 to 10 years' time. I think that offers a great potential. In other words, LNG infrastructure that we're building today will allow us to potentially transition that to hydrogen and hydrogen derivatives infrastructure in 5 to 10 years. So that's the way also we look at the investments and feel comfortable committing to it for the longer term.